Hello there, Mike Molina here with today's Mortgage Minute. I appreciate everybody's patience with me as I've tried to figure out a way to streamline these Mortgage Minutes. This was taking me about 3 to 3.5 hours every day to produce and get those out, but I've worked out a much more streamlined option now, and I'll be putting these out on Monday, Wednesday, and Friday to make sure that I'm keeping you fully informed. So let's get into it, shall we, with the big news, of course, the collapse of SVB Bank and also of Signature Bank that happened on Sunday. So these two big banks represent the second and third largest bank collapse in U.S. history since the big crash of 2008. So that's substantial. And of course, the big concern was there's going to be a run on the banks and we were going to have another great financial crisis just like we did in 2008, and everything was going to fall apart. Fortunately, the federal government has stepped in, and they're not doing a bank bailout per se, but what they are doing is they are guaranteeing all depositors, because as you know, the FDIC insures depositors up to an amount of $250,000. But we learned that SVB Bank, Silicon Valley Bank, had about 90% of its depositors had in excess of $250,000 in their bank. So that would have just been devastating for all those people to lose that money and those businesses. So the federal government stepped in and says they're going to buy all the bank's assets at full price, even though they're not worth that. And over time, they'll mature. And how they're going to fund it is they're not going to pass it on to the taxpayers, because that would just cause inflation to go up and send everything right back to where we just been coming off of, right? And so they're going to do an assessment on all banks in the country, basically charging them a fee to help pay for it. And then as these investments that they purchase over time mature, they will recoup their money and there won't be a loss, and everybody wins. So it's a kind of a bailout, but not a traditional bailout as what we're used to. It actually makes sense. It's actually quite smart. It saves the people who had their money in the bank from losing their money. It saves other banks from having runs come upon them and people panicking and basically just having another financial crisis. So that's some really great news. And in response to that, the bond market took that news very positively. Obviously, there was a lot of panic mounting up over the weekend, but when that announcement was made, the bond market took that positive in many ways. For one thing, we're not going to have a crash. For another thing, we're not going to add to inflation. Things are not going to be passed on to the consumer. And so they took that. And so we saw a big improvement in rates today. And what we're looking at is approximately, we started off the day really well. If we take a look at the Treasury market, you can see, remember, the interest rates tend to follow the Treasury. So this has been our trend since the beginning of February, up, 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 up. As you know, rates have been going up, up, up. This is what we've been seeing over the past 3-4 weeks. And then on Thursday, we got some news about SVB Bank. And things started to improve. And then on Friday, more news, a drastic improvement. And then today, all the way down, we are now at a point where we are, the 10-year Treasury is better than it was at the beginning of February. So we recouped all that ground we lost over the past several weeks in just one day. Now, at the end of the day, the market did turn around some and gave some of these gains back. But overall, we are much better off than when we started just a few days ago. And we're looking at today, interest rates for conventional 30-year fixed with 1 point at 6.375%. That's it for today. Thanks so much for watching. If you have any questions or want more information or details about the collapse of these two banks and where we go from here, I'm more than happy to give that to you. So please don't hesitate to reach out to me. But overall, the big takeaway is things are going to be fine. Things are calming down, and we're going to stay on course, and we're going to continue to see an improvement, and rates will improve throughout this year. And we're going to see a really good market in the coming months. Thanks so much for watching. Please be sure to like and share, and have a wonderful day.